if trader here with another ICT low-hanging fruit approach. This time looking to look for a trade opportunity within the London Stock Exchange. The London session in terms of equities market is a bit of a hit and miss. So I would be looking to utilize the silver bullet window within the session. And at this point, I don't have any particular bias in mind. I'm currently watching that 15-minute CV, anticipating that to turn into an inversion. And that's what I would use to look for a low-hanging fruit approach by looking for a long framework of that inversion CV, and there we have a closure above the current 15-minute candle trading back into that anticipated inversion CV. But I would be watching that current 15-minute candle to see how it's trading back into the levels of interest of that anticipated CB, which is the high, the consequent encroachment, and the upper quadrant. I would be more eager to see where the current 15-minute candle closes, and that is when I would be confident to execute long. Current trading day is Monday, and this is one of my taboo days for looking to position myself within the markets. However, looking at the weekly lookout on the economic calendar, we have high impact news by way of FOMC conference during or midweek. So looking to get my piece of the pie earlier on during the week, although I would be looking to look for an opportunity on Wednesday during the or post the FOMC press conference. Okay, back to the chart and price. I'm annotating that anticipated bullish breaker that would be potentially utilized to frame a long setup, if at all, after price traded into that anticipated ICB. It expands a bit far. I would be looking to utilize that anticipated bullish breaker, just annotated like 12 candles back. Also noting the smart money technique at the lows between US 500 and Nas100. Nas100 failing to make a lower low, while ES did. I'll be favoring to position myself within the Nas100 price action as compared to US 500. Nas100 is looking to be more stronger to the upside, hence will likely deliver better for longs. Currently watching that anticipated ICB, the current 15-minute candle trading to the low of that ICB, and that is of no concern. The most important part will be to note where that current 15-minute candle closes to give me that confidence that this anticipated ICB will hold and will now support price to the upside. Noting also we are currently trading just at the true day open by way of the midnight opening price in New York. We are, in terms of time, currently trading within the London silver bullet window, which is 4 to 5 a.m. New York local time. Just above, we have a 1-hour CB. That price traded to the previous day's PM session, resisting price lower into today, which is Monday. If price presents a long setup and begins to trade higher, I would also be looking for price to disrespect that 1-hour CB and utilize it as an inversion to the upside. We just, from that ICB, price delivered to a short-term high just above market price, just doing a shallow run above that. So I wouldn't consider those buy stops completely taken out. So if ever this current candle closes above that ICB after trading back into it, I would still look to elect to going long and targeting other buy stops above market price. We also do have a volume imbalance, a discount volume imbalance that just formed within the last or within the current 15-minute candle and the one prior to that. I could also look to utilize that discount volume imbalance to position myself long somewhere inside that discount volume imbalance, and that would be formed once this current 15-minute candle closes somewhere between its opening price or above. Also noting that 4 a.m. opening price that begins the London silver bullet, that I would be looking to utilize for going long. You would want to go long below that opening price as it serves as a short-term discount, noting the very current buy stops that I would look to target once the current 15-minute candle closes above, validating that anticipated Isibi, and there we have a closure right there. Once the current 15-minute candle begins to trade lower into that discount volume imbalance, I would look to execute long anywhere between the high of that anticipated bullish breaker, that discount volume imbalance, and would now look for price to expand to the upside. We still haven't got that trade back into that discount volume imbalance or even the breaker. US 500 being the weaker of the two, trading back into its ICB. There we have the candle trading back, executing long right there. And at this point, I'm confident that we are now in a buy program, even with that candle trading back into that anticipated ICB. You would want to see that if you would want to go long, that is how you buy the low of the session or the low of the day, by longing as price has a huge down close candle. That is how you buy the wick. And also at this point, I'm noting that discount wick of the candle prior to the current candle, and noting how price respects the CE of that discount wick and the upper quadrant. Those are the levels of interest that I would want to see the current candle respect by not closing a candle's body below those price levels. So at this point, I have a bunch of confluences as far as discount arrays that I'm looking for to support price to the upside, by way of the bullish breaker, the discount volume imbalance, as well as the anticipated ICB to support price higher and attack buy stops above market price. And on the current 15-minute candle, that's how the wick forms, and this is how you'd want to position yourself long within the wick of that candle. And this applies to multiple time frames. In fact, it's a fractal that occurs in all time frames available. Taking a partial out there at 10 ticks or so would be now looking for, all right, closing both positions right there for 10 ticks, content with that for a low hanging fruit approach. Thank you.